Shares of Gamestop are surging today after CEO George Sherman announced he'll step down effective July 31st or sooner. If a successor is found before then, the company is seeking a new leader to help its pivot to e-commerce after the Reddit-fueled short squeeze that sent shares skyrocketing earlier this year. Now, GameStop is still well off those record highs. It was up at $483 in January. Still, it's up about 6% today, and it's up ninefold year to date. Dominic Chu, the CEO, leaving. What happens now?
So what happens now is this is the next incremental step in their transformation into this e-commerce kind of online-only focused company that Ryan Cohen, the founder of Chewy.com, is trying to transform themselves into. Now, he's a board member, but he's been tasked with kind of the strategic initiatives within GameStop to make it more like the online presence and powerhouse that could command a kind of valuation that we're seeing right now. What's curious to me is the people who have kind of made this a meme stock over the past several months here are some of the ones maybe that are kind of committing a little bit more to it. We know that Roaring Kitty, right, one of the folks out there, one of the big Reddit traders out there, instead of taking profits on his option position to own more shares, he actually exercised them and took a bigger stake in the company. So in this case, I think this is one of those situations where this has become a story stock rather than anything else. And it'll be curious to see whether or not people say, hey, yes, you know, I buy the story. This is a long-term turnaround trade, if you will.
And Molly, what would you say? I mean, what's most important for investors to ponder as they consider the changes that they're making, they're announcing today and that are going to come in the weeks ahead?
I mean, what I find fascinating about this is that there's an argument to be made that Roaring Kitty is actually running this company right now. He is driving this bus. You're seeing all of this executive turnover in the response of, you know, in the wake of, frankly, a company that has failed to capitalize so far on winning the lottery. And so if he is driving them toward a strategy that might be successful in the long term, I find that to be a fascinating power play, but also a really interesting development, like you said, Donna's story.
Julia, final word on this.
Well, look, I think it's really interesting that they did see 175% growth in e-commerce sales in the most recent quarter, but it still only accounts, e-commerce only accounts for about a third of sales. So they have a lot more room to go there. I think it's all about hiring a CEO who has real expertise in e-commerce to show that that's really where the company is committed to going.
I said last thing, but Molly, real quickly, I mean, who would be a good CEO candidate? I saw in Tech Check earlier that people have floated the likes of John Ledger and others. I mean, anyone to you kind of come to mind as having the right personality to be able to handle this assignment?
I mean, you do have to put yourself into a power struggle with Roaring Kitty, so it's going to have to be a personality. But yeah, I mean, there are companies that have successfully made that transition even recently. I'd be looking to Walmart. I'd be looking to Target. I'd be looking to somebody who really did reinvent a business.
Walmart? At GameStop?
I don't know. Walmart's come out of nowhere. You can't discount them.
That's stranger things have happened.
They're as old
Kelly.
A name as GameStop.
Yeah.
Stranger things have happened.
I still can't get over Roaring Kitty's link back to DieStat, but that anyone in the running community, you know, of my age would know exactly what we're talking about. Somehow Keith Gill shows up everywhere. All right, let's talk about these big announcements we just got out of Facebook. A suite of new audio products from conferencing to podcast sharing to live audio rooms. Yes, just like Clubhouse. And a conversation going on right now on Discord, ironically, CEO Mark Zuckerberg is saying that the big picture is to treat audio like a first medium like photo and video, and it comes as one of its biggest rivals in the audio space. Yes, Clubhouse, now reportedly valued at $4 billion after its latest funding. So, Julie, these headlines are coming across right now. We've seen this company copy very well in the case of Instagram stories, and also not as well. What do you think is important here?
Well, what's really interesting, Kelly, and I have to say this call is happening right now on Discord. This interview is happening. I was just listening to it until moments ago. And what Zuckerberg is saying is they want their strength in all of these different tools, whether it's groups or whether it's reels or whether it's, you know, audio, video calling. They want to really extend that into the audio space. They do see audio as a first-class medium. So a couple of key announcements here. You know, reels, the short-form video clips, they want to do that, but for audio. They want to be able to deliver you a bunch of them so you can watch a bunch at once. He mentioned they're going to have a podcast sharing tool, which is interesting, showing they want to be a place where you could find and identify podcasts or share podcasts with your friends. Also live rooms, just like Clubhouse, and just like what we are listening to right now on Discord. And then also offering more tools for the creator economy, Kelly. He really sees this as a way to get creators to want to spend time on their platform and share on Facebook's platforms. But as you look to the future, Kelly, it's a lot easier to create audio content than video and a lot easier easier to consume it when you're multitasking. So I think that's why Zuckerberg is really so.
And Dom,
focused
I haven't really found
right
any Clubhouse rooms I've found interesting yet, but someone the other day mentioned a fascinating concept, which is we all know about these live chat apps that are on throughout the workday, and they said, why couldn't you basically have a live, let's call it conference call, an audio room, whatever you want, amongst your far-flung employees that actually captures that? What are we all doing in the newsroom? I'm not looking at you. I'm just shouting over at you. I mean, why couldn't... I can understand the power of harnessing some of that.
I mean, that's what all these productivity tools are meant to do, right? I mean, I'm talking about big name companies like Microsoft with their Teams product or Slack with their Workplace product. I mean, all of these things are ways to get people to collaborate and kind of work together and listen and try to figure out ways to communicate even better. I would say this, the interesting part about the reason why this story resonated with me was I'm not sure, and it kind of struck this chord with me, I'm not sure how much of the success of a company like Clubhouse is due to this anti-establishment feel that a lot of users have, right? Because Facebook is now, believe it or not, the establishment within big technology. And that's the reason why so many people are gravitating away from platforms like that. What they did with Instagram was almost another era at this point here from what's happening with Clubhouse. And so with Clubhouse, this could be a big deal. But yes, I mean, Kelly, we could still shout to each other right now that you're back in the office. I'm not sure exactly what it does if you kind of put it in a platform in social audio.
Right. Molly, what would you say to that?
I think everybody is looking for the next sort of version of engagement and what that means. And social audio is really popular right now. I would argue that it's going to be hard to sustain momentum for live audio in that way at scale. Small groups like to do it. My kid likes to do it with his friends when he's playing video games. But I don't know that it's, it will eventually transition into on-demand content. And then that will have the same problems that all on-demand content has, which is discovery and the fact that not everybody is equally talented.
Well, and for Facebook, it seems to say it doesn't really cost us much. It opens up the opportunity for us to grow with this pretty quickly and just kind of see where it goes. Let's talk about WeWork, which is looking to go public again. The firm is now expected to merge with the SPAC BowX Acquisition Group. That's ticker BOWX. Now, that merger would take place later this year. And according to its latest investor pitch, they now present a massive growth opportunity with more than 800 locations in the real estate portfolio. But there's a catch. One of many. Regulators have questioned WeWork's profit and growth, measuring benchmarks ahead of its failed 2019 IPO, and legal experts are saying the latest figures echo some of these same projections. So, Molly, is this really important new information or just a reminder that this may be kind of the old dog in new clothing, so to speak?
I mean, it's hard. I have to be honest, I wouldn't trust WeWork at this point if they told me the sky was blue, let alone their business projections, even though I can see a universe where actually shared office space is really appealing after the pandemic if companies sell corporate headquarters and workers have moved away from hubs or they want to split time between home and a place that's less distracting. So there's a universe where some projections could make sense, but a company that's already had so much inflation of its own goals and then is sort of trying to do the same thing but with less scrutiny, I think you have to have an even higher bar of skepticism than you would otherwise have, which is already high where WeWork is concerned.
And Julia, what do you think is their best pitch to the investing public right now? As we think about, okay, well, at least the pandemic will have receded. You can understand the attractiveness of that kind of remote on and off workspace, maybe now even more so in the post-pandemic future.
Yeah, I think that's really the question, whether people are going to want to get out of their houses. I think there is an assumption that there is just going to be more hybrid work. Hybrid meaning sometime in the office, sometime not in the office, and maybe some people are going to have that time not in the office, be at home. And also, if companies are giving up those big headquarters, as Molly just mentioned, are they going to be turning to WeWork to have a home base where companies can meet up, their employees can meet up with each other without having to go into a big corporate office? But I think we're talking a lot about the dispersion of employees across the country away from big corporate hubs, but we'll see if that really lasts, say, a year from now.
Shepard Smith here. Thanks for watching CNBC on YouTube.